Welcome to the April 8th, 2024 advance report from McGowan Group clients and networthradio.com listeners. The incredible rally of 2024. Here's your weekly update. Wow, what's winning in this rally? Well, it turns out technology stocks are up 9%. Energy stocks are up 17%, even trouncing the S&P's incredible 10% year to date. That's part of the energy infrastructure allocation that we've had in the portfolios. We started on that project back in 2018, and of course that's working now as the multiples expand and institutions come back into energy infrastructure, apparently realizing that net zero is probably not going to come to pass, at least in our lifetimes. Oil this week bounced up to $86 a barrel, confirming a rally. That's the highest price since October, and of course it contributed to the rally in those prices. What's this right here, this disruption in the rally? The Dow's up 5% year to date. But what happened in this little drama here? Treasury bond yields spiked. Manufacturing, for the first time since 2022, manufacturing activity expanded. Immediately, they sold off the 10-year U.S. Treasury. The yield went up to 4.35%. It put pressure on the Dow, and you see a decline from near 40,000 to as low as 39,000 this week. And yes, inflation will be a key variable. Here's part of that logic. You can see when inflation was 9% back in 2022, and we even got a couple of months of near zero, but whoa, that trajectory says inflation is sticky, and gasoline prices headed towards $4 a gallon, and I think they're already there for premium right now. Well, that says that this is going to be a sticky equation, and the Federal Reserve may not cut as fast as anticipated. If we get a month down here at 0.2 or less, then you're likely to see an incredible resumption in the rally that we've had, a lot of that based on earnings growth. Now, big phenomena. There was Digital World acquisition, and they were teaming up with Trump Media. So Trump's social media network, Truth Social, the merger finally took place. The stock goes from about $17 all the way to $79. Well, what happened this week? They announced a loss for last year, $58 million. This company, I believe, even though whether you like Trump or not, I don't think this company is worth $7 billion. I think that's way ahead of itself. And I would wait for profitability. That's usually, if you have a company, you think it's going to be great. If they're losing money, 90% of your investing mistakes can be eliminated by not buying companies that are losing money. Remember the EV makers that we covered? Well, Tesla's still making money, but they actually sold fewer cars than last year. So Fisker, the others like Lucid and Rivian, those stocks have completely tanked after being grossly overvalued. And what was the characteristic? They were losing money. All right, this is gold. Everybody asks about gold. Should I buy gold? Well, I'm going to give you a factual history that says we might want to take a deep breath. $2,305 per troy ounce, the first time in history. That's a big rally in gold. But if you look at gold's history, does it really keep pace with inflation? And the answer is sometimes not. Sometimes painfully not. Let's look at this right here. 1980. I'm sitting there reading U.S. News and World Report. I was in high school. I said, "Hey, Dad, we should buy gold." And he said, gold will hit its high of $800 per troy ounce in the first 90 days of 1980, and we'll never see it again. Well, his prediction was correct for 22 years. Now, after that, well, he hadn't revised his prediction. But anyway, it goes from 800 by 2002, right? It is down here at about 250 per troy ounce. Inflation doubled prices over that miserable 22 years for the gold bugs. Wow. Well, the central banks were divesting in gold as the international payment systems took over a lot of that demand. You know, Fort Knox, they used to move the gold from one cell to another if Ecuador was going to pay Mexico for something. Well, it's a little faster to do a wire transfer, and it's more profitable to own bonds. Why? Bonds pay cash flow. Wow. What happens when you hold gold that long? 22 years with no cash flow, and you lose over 2/3 of your purchasing power. Actually, you lose about 90% of your purchasing power if you factor in inflation. Well, that was not good. And it happened again. Look, so they do the gold ETF. People that are Bitcoin aficionados keep this in mind. So they did an exchange traded fund where you could buy gold. Made it easy because it's hard to carry enough gold around to buy a car or something. So everybody piled in. Boom, easy to buy. Whew. You go to 1900 per troy ounce, everybody's screaming there's going to be inflation and you need gold, and you know there's going to be pandemonium and puppies and kitties hugging and stuff. But anyway, look at this. You go from 1900 to 1000 and you don't get back over that price for how long? Wow, that's from 2011 all the way until 2021, I believe. So you do a decade with no cash flow, and at the worst point you got chopped in half, and your price didn't seem to have anything to do with inflation. Now, I understand people buy gold because they think there's going to be inflation. But what happens at a big inflated price? All the housewives get together, they invite a jewelry, they take their husband's old gold medallions and chains, they sell them for cash, and you get a flood of supply on the market as all the wives get together for their Tupperware gold selling party so they can drink rosé and run around with a big pile of cash. I'm Spencer McGowan, your financial weatherman. I am President, McGowan Group Wealth Management, a fiduciary, registered investment advisory, serving affluent clients right here from the Crescent in Dallas. If you go to networthradio.com, you can meet the team there. You can also contact us to set your time for a brainstorming session to upgrade your plan. Thank you for tuning in today to Net Worth Media. We also have Apple Podcast. Simply type in Net Worth Radio and boom, it'll hit your phone right then. If you also go to networthradio.com on a browser, you're going to be able to meet the team. You can see our performance track record, the model portfolios that go with today's broadcast. Also at networthradio.com, the longer play podcast is available there as well. We're grateful that you've tuned in. Remember, when we talk about a security, it doesn't make it a recommendation for your portfolio until we actually complete a written plan for you by Zoom or in office or simply a conference call. So you reach us at networthradio.com if you want to get that arranged. Market fluctuations and how to handle them. We build high cash flow portfolios, and past performance doesn't guarantee future results, so you do have to be ready for challenging markets. We can build more cash flow during challenging markets than we can when everybody's happy and everything's up, which is when we tend to raise tactical safety. Those allocation strategies are here at networthradio.com. Thank you for tuning in.